That is the closing bell on Wall Street, and now it's market domination overtime. Getting full team coverage of all the moves to get you up to speed on the action from today's trade. Yahoo Finance's Josh Schaefer is here with me, as well as Mark Newton, Fundstrat Global Advisors Managing Director and Global Head of Technical Strategy. So markets, looking at the popular average here, looks like we're then mixed. The Dow's going to finish down about 90 points. The S&P 500 looking unchanged, flat at 60.92. I have the NASDAQ up about 0.3%. Joshua, over to you for more on where the market's closed.
Yeah, Josh, so as you mentioned, not a ton of action in your major averages, and there really wasn't even a ton of movement when you look at just this intraday of the S&P 500. I think at the peak of the day, we were maybe up 0.2%, so really markets didn't even move that much at the index level either. A couple of other things I want to hit on, Josh, that we had sort of been following over the last couple days. So the 10-year T-note we had been talking about, right? Of course, that had been on a recent decline, did not move much today. Then I'm going to flip over to Bitcoin. Let's take a look at how Bitcoin did on the day. Bitcoin up slightly, over 107,000 a coin right now. And then also looking over at oil. Oil ticked up a little bit today. We had been following a pretty big decrease in oil over the last 2 days, right? If I flip this to a 3-day, that had sort of been the story of the market to start the week, was oil lower, stocks up. But the big news, I think, in a world where we didn't have too much move today, Nvidia. We had Nvidia hit a record close today for the first time since I believe it was January, so one of the first record closes for Nvidia of the year. And if you just flip out over the last month or the last 3 months, stock's been on a pretty good run off the bottom, right? So this was sort of your April low. Off the tariff news, Nvidia fell with the rest of the market. Stock has been looking pretty good and now hitting a new all-time high. I will also call out just broadly the semis have been doing pretty well. So if you look at the chip sector and then take a look at a 3-day here, we had a decent rally in semis yesterday. You can see Broadcom was up 6% over the last 3 days. AMD up 12% over the last 3 days. So decent action there. And then I'll just close out here with the sectors on the day and get your outperformers. Outperformer on the day was once again tech. Had healthcare a little bit, slight outperformance, I guess we could call it, but really another tech-driven day in markets.
All right, thank you, Joshua. Mark, I also want to get your take here. Give me the technical take, Mark, on today's action. What do you see?
Well, the biggest development, I think, was Nvidia hitting new all-time highs. I mean, it's 7% of the S&P, and certainly a big move. A lot of people thought it might stall out near that 153 level, and to get above that, in my view, is going to be positive in the days to come for both S&P and QQQ. So it's really about the move this week, less than today. We saw a really good movement this week out of the financials, and the week being only Wednesday. So it's really been Monday, Tuesday. Remarkable outperformance in the last couple of days out of industrials, financials, transportation, and consumer discretionary. All sectors that had lagged. Into Monday of this week, over the last month, 8 out of 11 sectors were down over the last month. Some to the extent almost 2 to 3% when you look at financials, industrials. That has all changed, folks, this week. So a very, very good recovery, very good signs out of that, a broadening out in this rally. Many people get skeptical as indices hit new all-time highs, but honestly, that's the time you really got to pay attention. Sentiment remains offsides, and that's a key message. Until we see all these CTAs and hedge funds really start to pour money back into the market, trends look great. The economy's good, earnings are good.
All right, thank you, Mark. Well, Micron, third quarter earnings just crossing the wire moments ago. Let's get out to Yahoo Finance's Julie Hyman with the latest. Julie.
Yeah, you got it.
Yeah, I mean, speaking of the earnings of good column, here's Micron here. So the company's third quarter adjusted earnings per share, $1.91. That is 31 cents better than estimated. Adjusted revenue coming in at $9.3 billion. That too better than estimated. And gross margin, that's a measure on which Micron missed last quarter, coming in at 39%, better than the 36.8% that had been estimated. But that's not all. The company also coming out with some forecasts that beat estimates here. The company's fourth quarter revenue estimate is at least $10.4 billion. It gives a range upwards of that. That's better than estimated. And its gross margin forecast for the fourth quarter is 41 to 43%, above the 39.2% that was estimated. Fourth quarter adjusted earnings per share seen at 235 to 265. Analysts had been looking for 203. So it looks like here on a number of different metrics, the company is beating estimates. And the stakes were high here going into these numbers because the shares were up more than 50% year to date here. They have been rocketing higher because Micron, which is a memory chip maker, which is a commodity business, tends to be very cyclical, has caught the AI wave through a product it makes called HBM, high bandwidth memory. That is bundles of dynamic random access memory chips that are then connected to processors from Nvidia, and of course power data centers and the whole Gen AI situation here. That's kind of why people have been bidding this one up. But there was a little concern going into this one that the shares were pricing in too much optimism. We'll see how that plays out here. It looks like at first blush, the shares are moving higher, especially given that those gross margins, what were expected, which were, as I mentioned, missed last quarter, did not miss this time around. I was looking at some commentary from Jordan Klein over at Mizuho, and he said that Micron would be the real semi-investor sentiment litmus test post the close, and indeed here we have it. So are we going to see a ripple effect here from Micron potentially to some of the other chip makers because it did come out and beat those elevated estimates? We'll see. Josh, even in situations, right, if you look at an Nvidia, for example, even in situations where it's come out and beat and raised its forecast, hasn't necessarily continued to move higher from here. So we'll see if that is the case with Micron, particularly after its conference call.
Yeah, what's so impressive there, Julie, I mean, as you know, the stock was, heading into that print, it was already up about 50% this year. You're surging now, though, in the after hours. Thank you, Julie. Let's get some more reaction to Micron earnings. Joining us now is Corey Johnson, Chief Market Strategist at Epistrophe Capital Research and host of the Drill Down podcast. Corey, Micron reports, at least initially, investors like what they see. This stock is surging in the after hours, but give me your initial take, Corey, on the report.
I have to tell you, when I was looking at my model over the weekend, I thought, I must be insane to be looking over $9 billion in revenue. What am I doing wrong here? And I look and they put up this print of over $9 billion in revenue, $9.3 billion in revenue. And it was driven by the things that I wrote about in my preview note, Josh, I sent you as well, which is talking about high bandwidth memory, talking about sales into the data center. We knew that they were sold out going into the quarter, but the nature of the way they were sold out and what they were selling was so interesting. This high bandwidth memory, it is not only different than DRAM of old. Right now, if you want to think about it in a very basic way, it's like stacking up pancakes of memory all working on top of each other, and then stacked up really close to the GPU. Used to be memory was sort of more dispersed on a circuit board, and it allows a GPU in a data center to access a lot more memory at any given moment, and it allows the work of both inference and training and inference to happen in the data center of an AI model. And they're selling this stuff like pancakes, like hotcakes, right? I don't really know what a hotcake is, Josh, you might. But they're selling these things like crazy, and they're selling them out, and they're selling them at better and better margins. And it's a really impressive product. What's curious, and I'll be listening in the conference call to hear, are any hints that they might have a lasting advantage here? So traditionally, what we've seen from Micron is selling kind of the same product as their two big competitors in Hynix and Samsung. But with high bandwidth memory, and to be clear, they weren't the first ones out there with high bandwidth memory, but they seem to be leading and growing market share. And the question here is, are there process advantages that they have that can last for a while to help them grow even faster than the market? And indeed, some IP advantages. That's what we're listening for.
And Corey and Josh, I just want to mention some other numbers are in the press release around what Corey is talking about here. So the company said it saw an all-time high in DRAM revenue. That's dynamic random access memory. That includes the high bandwidth memory subcategory that we're talking about, which saw 50% sequential growth. Data center revenue more than doubling, was at a quarterly record. But I think, Corey, to your point, the real question here is whether what was this fundamentally commoditized business that was very cyclical, whether it has changed over the long term, whether it's sort of muted but still in effect, right? How much has this sort of changed the calculus? We saw how much it changed the calculus for Nvidia. I mean, most semiconductor companies were sort of cyclical and commoditized. And we're seeing that become less so. So I guess we just have to figure out if Micron's going to fall into that category.
And also what they can charge for it, right? Can they charge their customers so much more because they are sold out? are they looking at the long term? I mean, Micron has never gone above 60% margins. I think their all-time record is something like 59.5, 59.4 or something. And indeed, in my modeling of this company, I'm trying to figure out, can they get to a higher number here? Do they, knowing the cyclicality of semiconductors, and no one knows that more than Micron, can they in fact start to take more profit from their customers, or do they risk the chance of pissing off their customers and not wanting to make that decision? Now, Nvidia has decided to take margins of better than 70% in a business that was once barely profitable. Let's see if Micron actually decides to do that, and again, what we hear on the conference call. But this is such an exciting time to cover enterprise technology, and the fact that Micron, which used to make just boring DRAM in the hearts of Idaho, is now making such an interesting product and such a technologically advanced product in high bandwidth memory, it just shows what an exciting time AI has given us in this moment in enterprise tech.
You know, Corey, we've had some tech analysts come on the show and they've kind of suggested, and I'm interested to get your take on this, that as tech investors, maybe you just keep it really simple. And as long as big tech is going to keep spending and spending and spending,
right,
billions and billions of dollars to build out their AI infrastructure, Meta and Microsoft and Alphabet, then you stick with names that are going to benefit from that, like Micron. What do you make of that argument?
It does make sense that at this stage of the build-out, you want to be in the place where, and again, I'm not giving investment advice, but generally speaking, if you look at who's spending and who's getting spent upon, you want to be in the spent upon world, right? You look at what Cisco did during the dot-com bubble, right? Where Cisco was a beneficiary of all these companies, many of which went bankrupt, building out their networking infrastructure, but Cisco, a great beneficiary there, also benefiting from the big spend out in telecom, even though some of those telecom companies overborrowed and did not survive. In the same way, I think that when we see companies like Meta, like Google, like Amazon, all racing to spend a lot of money to grow a great business. And all those companies have been really great at growing businesses. You might look at the other companies like Nvidia, like Micron, like Oracle, name that I own, to be clear of my bias there, but the places where they're spending the money, because they're actually going to get the money regardless of the success of the underlying business models or how long it's going to take for companies like Anthropic and OpenAI, and then throw in the AI models being run by Meta and being run by Amazon and being run by Meta. We'll see, and by all those companies, Alphabet, Google, whatever. Those companies are trying to build business models by spending tens and hundreds of billions of right now. It would make sense. Do you want to be in a place where they're spending the money, not the spenders of the money? Corey, always great to see you and to have you on the show, my friend. Good to see both of you guys. Thank you. All right, let's bring in back in our ensemble of experts. That would be Mark Newton here. Mark, I want to ask you, we heard the fundamental take there from the great Corey Johnson, but give me the technical take. You look at Micron's chart, Mark, what do you see?
Yeah, look, it's a real comeback kid, right? Micron went down to the mid-70s into April, so it's up about 80% or so just in the last 12 weeks, or right around 6% a week. A remarkable and impressive comeback. And that's happened to a lot of these semiconductor companies. I mean, when you see a stock get beaten up that badly and momentum really starts to roll over, it's unusual to see such a rapid recovery. Look at stocks like Intel, for example, that have been down in the dumps literally forever. And so a lot of these companies like AMD and Micron, to see these come back, very promising in my mind that these are going to be stocks that eventually move back to new all-time high territory, and very good for the semi space in general. So look, when semis are working well, and they have been over the last week, it's very good for technology. Tech right now is leading over the last 1 month and 3 month period, largely based on the performance of some of these companies like Micron recovering from a really bad beating in the month of April.
Mark, an old adage you'll sometimes hear, I want to check this with you, you'll hear people say, well, you need to follow the semis. Even if you're not in the semis, you have to track the semis because they tend to lead the market on the way up and on the way down.
Yeah, that's true. Look, we saw a period last July when many peaked out and software really started to take over and show a lot more strength within the technology sector. And then semis have come back of late. I still like both, honestly, within technology. I think it's really, really difficult to be out of tech and say, well, they're overbought at this price or they're overvalued. Historically, we're not seeing multiples that really justify that. Even looking at the Mag 7, they're still going to generate about a third of all the EPS for the S&P, and they comprise about that much as well, so that makes sense. But at 29 multiple for like Mag 7, certainly nowhere near what we saw during the dot-com bubble. And now many parts of technology are just roaring right back to new all-time high territory. So for those that are skeptical, I mean, the market's come back in a way that's really surprised a lot of people, regardless of all the issues around us, and it pays to pay attention. So.
All right. Thank you, Mark. Coinbase stock has surged more than 40% since the Senate passed the Genius Act, a bill that would establish a federal framework for stablecoins, digital tokens backed by assets such as the U.S. dollar. But is it still being underestimated? Julie Hyman down at the New York Stock Exchange with more on what analysts and experts are saying about the industry. Julie.
Yeah, it's been really interesting, the surge that we have seen in anything stablecoin related. Circle shares, of course, have been the poster child for that, right? Because it is the only pure play way to buy into stablecoins. The other main stablecoin provider, Tether, is not publicly traded. So that's why we've seen all the enthusiasm with the passage of the Genius Act that then will provide that framework for stablecoins. But what we've noticed ever since that passed is that it's almost like stablecoins are the new blockchain, right? Everybody is throwing out product announcements related to them. Over the past week, we've seen companies from JP Morgan to Fiserv to PayPal make these sorts of announcements. So now, especially with the surge that we've seen in those Circle shares, the question is there indeed sustainability? What is the use case for stablecoin and what is the future going to be? Now, the Bank for International Settlements yesterday put out a paper that raised some questions about this and actually caused some turmoil in those Circle shares. It basically said stablecoins, quote, may at best serve a subsidiary role here. It says the monetary system can transform into a next generation system built on tried and tested foundations of trust and technologically superior programmable infrastructures. Basically says that the system as it exists can integrate with this stuff, but it probably won't be replaced by it. And that's something that some analysts are trying to grapple with as well. I talked to Dan Dolev of Mizuho today, and he called stablecoins the Gen AI of 25. In other words, this is a new technology that there's a lot of enthusiasm about and a lot of money being thrown at, but there's not yet a good understanding of what the eventual effect on industry, on the financial system, the use cases, etc. He is theorizing that it's probably not going to be that much of a consumer-facing product, except in one important use case where we're already seeing it be used, and that's for cross-border remittances, right? In certain countries where you see more volatile currency action, for example, it can be quite useful as a way to send money. We're already seeing that happen to some extent. So he theorized down the road, perhaps you could see it disrupt more business to business than sort of consumer facing. And in terms of what he thinks investors should be doing right now, he thinks that the likes of Visa and MasterCard and PayPal, which have fallen in recent days on concerns over competition from stablecoin, he says investors should get into those names because he thinks that that disruption has for now been overstated. But Josh, I just want to emphasize, there are still just so many questions about this. Even though the Genius Act puts in place that framework, we haven't yet seen a lot of products and a lot of adoption that is out yet for stablecoin in the US. And so this is a little bit of a wait and see situation there.
Indeed. Thank you, Julie. Well, Coinbase nearing a new high as analysts get bullish on the crypto exchange. Our next guest saying the market has not, in fact, fully connecting the dots yet for that company. Here to discuss is Citizens Director of Financial Technology Research, Devin Ryan. Devin, always great to see you. Let's talk Coinbase here, Devin, because making some big moves. This name has surged about 40% this month. Let's start there, Devin. Why? Walk us through the reasons for that move.
Yeah, I think there's a couple things, Josh. I think people are waking up to the view that Coinbase is much more than an exchange to buy and sell crypto assets. And this has really been our thesis from day one, that they're really building Amazon AWS of blockchain. And so anything that interacts with blockchain in the economy, Coinbase will have their hand in. And I think stable coins, which we're talking about now and are just so hot, are kind of really the first use case at scale, which I think people are getting excited about. But stable coins are just one part of a much bigger story of tokenization. And I'm happy to kind of talk about that. But that's kind of the big theme that's happening. But the other part of why the stock is up so much is because Coinbase actually has a relationship with Circle, which just went public, where they have a financial arrangement where they get 100% of the reserve income from treasuries of the USDC, the Circle stablecoin, held on their platform, and then roughly 50% of all other Circle revenues off platform. So Circle stock has gone from a $7 billion market cap, very successful IPO, to about $45 billion as of today. So if you can imagine, Coinbase has roughly 50% or more economic connection there. That would imply that Coinbase should be getting a lot of credit as well if people are bullish on Circle. So there's a strong relationship. On top of that, Coinbase owns 3.5% of Circle shares, so that's been nice for them as well.
I'm sure, Devin, there are viewers who are thinking, listen, it's a natural question. After you see a move like this, Devin, in Coinbase, is all the good news priced in? What's your response there?
Yeah, so I would say we're at their early days. So Coinbase essentially created this subscription services business 5 years ago. It was immaterial to revenues. Today, the run rate is roughly $3 billion a year. I see that growing to many multiples of that over the next 3 to 5 years. Stable coins will be a big part of that. So stable coins we think could be at least a few $1 billion, 3 years out, and much more over time. But there's many other aspects here that are just coming online. Legislation, Genius Act is a big deal because it will unlock stable coins. But then the much bigger conversation that I don't think people are even thinking about yet is tokenization and how this all connects together. So stable coins do have a use case, and I think will be integrated, first, kind of international, cross-border, business-to-business remittance. But businesses that are cross-border multinational, if they're adopting stablecoins, will be using them in the US as well. And there is peer-to-peer opportunities there. But then the bigger story is tokenizing other assets that then interact with stablecoins. So you start with the most liquid asset first, the US dollar, and then you go to money markets, and then treasuries, and then stocks, which Robinhood is very focused on. And then you go down the line to less liquid assets. And that's where this is all going. And Coinbase will play a role in all of that, and I think we'll share in a lot of those revenues, which I don't think people even get yet overall. We're talking about one aspect of it, which is stablecoins.
Well, when you're making the case for Coinbase, Devin, I'm just curious, your clients, and they ask you, okay, but what are the risks I need to think about with this name? If it's not, valuation, in your opinion, what would those risks be?
Yeah, I think there's still a lot of risks here as well, just in that this is still a nascent technology. We're evolving from a market that's been primarily around speculation, trading, which has also become more commoditized, right? And so that's where the market has been, because you really haven't been able to use the technology because there hasn't been rules of the road. As we now get the green light and new entrants come in, and banks and payment firms and other types of traditional financial institutions, asset managers, BlackRock has been talking quite a bit about tokenization as well. Where does Coinbase play in all that? We are bullish on their ability to connect because it's such a technical industry. There's not a lot of technical expertise. They have over 10 years of history. And so they are going to be a partner of choice in our opinion. But obviously, with a lot of new entrants rushing in, there could be competitive dynamics that haven't existed yet. And then there's a lot to execute. When you're have this massive addressable opportunity ahead of you, there's still a lot to execute on, and brand dynamics that you have to make sure you protect. And so, I think it's a big opportunity, but there's a lot for them to execute on to be able to achieve what we think they're capable of.
Devin, always great to have you on the show. Thank you.
Great to be here.
All right, let's bring back in our contributor here. That would be Mark Newton, Fundstrat Global Advisors, Managing Director and Global Head of Technical Strategy. Mark, you're looking at the charts. The technicals tell you what about crypto right now?
Honestly, they've made a similar breakout like we've seen in the NASDAQ just in the last week. I mean, the correlation is still very strong between Bitcoin and the broader averages. They both bottomed on April the 7th of the same day. Now we just saw Bitcoin get up above 105,000. So it's not at all-time highs yet, but it's headed in that direction very quickly. So my target initially is right near 118 to 120. And I think we consolidate a bit, and then I think we probably push up to 135, 150 into August. So the fall is traditionally a pretty tough time seasonally for Bitcoin and for cryptocurrencies, but this move literally is just emerging. And we've seen Bitcoin largely dominate most other cryptocurrencies. Its market cap has continued to grow. I expect that eventually we'll see that shift towards other alt layer ones, and we'll see those start to play catch up potentially in Q4. But for right now, it's all Bitcoin.
It's all Bitcoin. Thank you, Mark.